This is Matthew Crowder from Trader University, and today I want to answer the question, is BITW, this is the Bitwise 10 Crypto Index Fund, is this a good investment? If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading or investing in, be sure to hit that subscribe button. And I should say before I start that none of this is investment advice. This is just my 2 cents. So this is the product we're talking about here, BITW. That is the ticker that it trades under. You should be able to trade this inside of your brokerage account. I'm going to talk about why I think this is not the best way to approach crypto and Bitcoin. But let's first start by talking about what exactly this is. So this is an index fund that tries to track, or that tracks, the top 10 cryptocurrencies by market cap. So if we just go to coinmarketcap.com here, we can see in this column right here the market cap of each of the cryptocurrencies. Bitcoin by far has the largest market cap, currently sitting at 358 billion. Ethereum is an order of magnitude down at 66 billion. XRP at 23 billion. Tether doesn't get counted because it's a stable coin. There's no reason to invest in Tether for upside because it's essentially pegged to the US dollar. So then we drop down to Litecoin here at 5 billion, BCH, Bitcoin Cash, which is a failed hard fork of Bitcoin, etc., all the way down to number 10. Now there have been other coins. There's been BSV, Bitcoin Satoshi's Vision, that used to be in the top 10 and has since fallen out. But this is how the index is composed. If we scroll down here, we'll see the fund holdings. This was as of, it looks like as of Saturday at 4 p.m. It was basically 76% Bitcoin. So this is a mostly Bitcoin fund, 76, 77% Bitcoin. And again, they're weighting it just based on these relative market caps. So the larger the market cap, the more of that cryptocurrency in the index. It's mostly, as I said, a Bitcoin index, a little bit of Ethereum, about 13%, 5% XRP, and then just negligible amounts of Litecoin, BCH, Chainlink, Stellar, EOS, and Tezos. So these are the holdings. The thing that really I don't like about this, well, there are a couple of things. The first one is the fee. If we look what the fee is, it's 2.5% a year. This is a very, very high fee for a product like this. And it's even higher than GBTC, which I've talked about in other videos. GBTC, at least you get 100% Bitcoin. It charges a 2% fee. Bitwise, you have to really like these other cryptocurrencies. I'm fascinated by Ethereum, and it will probably continue to go up. I currently don't own any Ethereum simply because I'm not a fan of proof of stake. I don't think it's as secure as proof of work. And so even if you own BITW, the bulk of your returns will probably come from the Bitcoin holding. So I think that this is an inefficient way to hold Bitcoin simply because of that high fee. And then you basically get all this other stuff for that high fee, many of which XRP, not a fan of at all. You can see my other videos on that. This is a cryptocurrency that was issued by a centralized corporation. Now, the other problem with BITW, as I see it, is that you're paying a huge premium over what you are getting. And so this is how many of these things work. GBTC is currently trading at a premium above where it is. If we just look at the price of GBTC right now, it's, well, this was out Friday, but we can see that even though Bitcoin was at 18,000 something, 19,000, GBTC was trading as if Bitcoin was at 20,610. And so what happens is you end up overpaying for the assets that are in there. And this is especially true for some reason with BITW. So the Intraday Nav, this is the actual net asset value. And it looks like they take hourly snapshots of this even over the weekend. So as of Sunday, December 13th, when I'm recording this, 10 a.m. Eastern time, the value of the assets in this crypto index were at $17.26. So it's basically a basket that holds all these cryptocurrencies. The sort of per share value of the assets was $17.26. But where is it trading in the market? Or at least this is where it closed on Friday. it was trading at a huge premium. It was trading at more than 100% of the NAV. All the cryptocurrencies have moved up since Friday, so it was trading at even a larger spread than 100% to the NAV. So you're basically paying $38 for $17 worth of assets. It just doesn't make any sense. This is obviously still a small product, only $137 million under management. It can expand, it can contract, but you're getting hit in two ways. You're paying a 2.5% management fee. At the same time, you're overpaying for what is inside of the index. You're overpaying by 100%. Now this premium, what we call as a premium to NAV, it can expand over time, it can contract over time. There's nothing that says that this can't trade at 2 or 3 or 4 times NAV, but eventually these things end up being arbitraged. Now, GBTC is another way to hold this. The reason a lot of people like GBTC is it's an easy way to hold Bitcoin in your retirement account. You do have to pay that 2% fee rather than the 2.5% fee with BITW. There are also other ways of holding Bitcoin in a retirement account, which I've talked about in other videos. You can, let me just see here. There's a new product out by Choice, Choice by Kingdom Trust. It's called retirewithchoice.com. You can check this out. I've heard good things about it from other people. I haven't used it myself. This will allow you to hold Bitcoin in a IRA or other tax-deferred account. You can also check out Vulcan Trader's video, which I've linked to a few times, about how to get Bitcoin or any other cryptocurrency into your IRA. Now, this is, I would guess, the main reason that people want to own BITW, or it may just be plain ignorance. They don't really realize the kind of fees they're paying or the kind of premium that they're paying. The way I like to hold my Bitcoin, and I'll link to this video here, how I like to buy and store it. And basically, if you're investing in BITW, what did we say? 77% is Bitcoin. It's mostly a Bitcoin investment. But you can also use the strategy that I'm about to show you for other cryptocurrencies. I basically buy them using Coinbase or Coinbase Pro, which currently has their lowest fees are 0.5%. And then if you trade even higher volume or invest higher volume, using higher volume, you can get lower fees. So you can see these are a small fraction of that 2.5% or 2% annual management fee. So I buy it using Coinbase Pro. It looks like Gemini ActiveTrader also has lowered their fees. They're now even lower than Coinbase Pro at 0.35 or 0.25%, depending whether you're making liquidity or taking liquidity. So I buy it using one of these two exchanges, and I only own Bitcoin. I withdraw it and hold it on a hardware wallet like a Trezor. Trezor is an open source wallet, and you basically, after you buy your Bitcoin inside of Coinbase Pro, you can just click the withdraw button and withdraw it, excuse me, and hold it all on your hardware wallet. That's what I discuss in this video, which I will link to below. But before I end, I wanted to talk about how these fees really do affect you over a long period of time. So let's say we're putting $100 into BITW, and we're going to hold it for 1 year, and so that the fee on that $100 is 2.5%. It gets taken out, I presume, weekly or monthly. I'm not sure exactly how it accrues, but you end up paying $2.50. Let's say we think Bitcoin is going to go up 10x over the next 12 months, which I believe. Ethereum, XRP could possibly go up higher. They might not go up as much, but let's just assume BITW as a whole goes up 10x simply because it's mostly Bitcoin. If it goes up 10x, that $2.50 that was taken out could have been worth $25. I'm simplifying here because maybe it's taken out every month, so you will get a little bit of appreciation before it gets taken out. But especially if your holding period extends, which it probably will, if you're considering this for a retirement account, that's probably the only reason to consider it. That $22.50 could have been worth $225, which is a 25% return on that original amount. So that's basically what you're giving up. It's your opportunity cost by having to pay fees. If you think Bitcoin's going to go up 100x, as I do, then your opportunity cost is even larger. This number is $250 which is 2.5 times your initial investment. So you can see here that it's very important to take as little money out at the beginning, especially when you think something is going to go up 10x or 100x. But it gets even worse, because if you hold it for 10 years, and I think anyone who buys Bitcoin should have a very long holding period. Again, not investment advice, but that's what I'm going to do. I'm probably never going to sell my Bitcoin. Instead, at a certain point, I'll start to borrow against it if I need to. But a 2.5% fee, which is what BITW has, extended over 10 years, is 25%. You can imagine when Bitcoin is trading much higher, and you're still having to extract this fee. So this 25% as a percentage of where you started with is, again, very large. And this is why investors prefer normally index products like the Vanguard S&P 500 index products, or SPY or QQQ. These have very low fees. These kind of fees on cryptocurrency indices will not last forever. They're outrageously high. But for now, there are not a lot of competitors, and so the fees remain very high. And I think investors should be very wary of this. You're really overpaying, and you also don't get to hold your private keys for the Bitcoin or for the other cryptocurrencies in the index, which means if you don't hold your private keys, they're not really your coins. You can't move them around, and you can't do self-custody, which I think is very important, learning how to use Bitcoin. And especially makes sense to practice doing these things before Bitcoin has its big run up. If you own one Bitcoin now at about 19,000, it's scary enough to move it around. But imagine when that $19,000 is worth $190,000 or 1.9 million, as it should be in probably about 4 years from now. It's going to be much scary to have to learn these techniques for how to buy Bitcoin and how to move it around using hardware wallets. So I encourage everyone to learn these skills while Bitcoin is still relatively cheap, and to avoid high fee products like GBTC and BITW. They may work for your particular situation, so consult with a financial advisor. But I don't see how the fees, how the premium that you're paying, that huge premium to NAV that you're paying, that we talked about, as well as the fact that you don't get to hold your own private keys. Much better if you're not a Bitcoin maximalist and you want to hold all these different cryptocurrencies, which can get very messy in itself. You can always buy them individually in a Coinbase Pro account or a Gemini ActiveTrader account, withdraw them, and hold them on hardware wallets. There's also a lot of churn that goes on in indices like this. As we said, BSV used to be part of the top 10. I imagine there's a lot of, especially at points on the list, number 9 and number 10, there's these as the cryptocurrencies move around, some of these will fall away, some will be jump back up. Maybe number 11 moves up to be number 10. And so there's a lot of buying and selling that goes on behind the scene, which is also very tax inefficient. I'm not sure exactly how that shows up. I'm not sure if you get a K1 when you invest in this, because it is a trust. There's a chance that you might get one of those. Either way, that's definitely a question for a tax advisor. For my part, I'd rather just keep it simple. Just buy Bitcoin, self-custody it, hold my own keys. I'm currently using a multi-sig solution, which I talk about in another video. I'll link to that as well. It's a little more complicated way of doing it, but a more secure way of holding your Bitcoin. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.